All right, here we go again. I'm so excited. This is going to be a great training session. First of all, I want to give a quick little overview of what we're doing here. We've got Chris and Terry joining me, and Terry's going to give a little bit of an intro. But when it comes to buying or leasing, there are lots of questions. And Chris has taught me that there's no wrong answer, just options. So I know this time of year, we get blitzed with emails. We hear all kinds of jargon, tax advantages. It all starts to kind of blur together. And Terry and I thought, you know what, we need to have an expert, just like when we have Ask the Expert, and it's usually DTG related, and it usually means ask Terry or ask our tech support or ask Roy or somebody. This time it's financial. We're going to ask the expert, and it's Chris. And Terry, I'm excited because you guys have known each other for a long time.
Absolutely. Yeah. Chris Frame is with ACG Equipment Finance. Chris and I go way back. We've been friends for a long time and been in a business relationship for even longer, even pre-Equipment Zone days. So
Wow.
Chris, welcome into the webinar.
It's good to be here. Thank you so much for inviting me.
Excited.
Well, let's jump right in, Chris. So talk to us a little bit about some of the main benefits to leasing equipment rather than buying it outright.
You bet. So first off, statistically, 80% of all U.S. companies purchase their equipment versus traditional financing. We have leased equipment to Pepsi-Cola for a $5,000 coin counting machine, Sheraton Hotels for a $5,000 fry cook, Johnson & Johnson's medical division called Ethicon leased a $5,000 copier. I have quoted Walmart before on $30,000 in wide format equipment. Nothing ever happened, but they said that the sales rep told me that Walmart leases all their equipment.
Did he say he'd get right back to you, Chris? I'm just curious.
That's right. And then Valvoline even leased $170,000 in calibration equipment from us. And then lastly, Disney, a company called Erebus Brothers, leased a $34,000 laser. So even the big companies lease purchase. And the main reason that these companies typically do it, they could get it cheaper at the bank. Obviously, they've got the cash to pay for it, but they typically do it because of the write-off. With a lease purchase, again, don't think of it as a car lease with a big balloon payment at the end. It is a lease where you own it outright at the end of the term, but it allows you as a business owner to expense off that monthly payment. So there's no depreciation. It's off balance sheet financing. You are writing off that payment, the whole payment, as an expense. So that's typically even why the big companies do it. For small businesses and new businesses, which we do, excuse me, we do finance for new businesses. They typically do it not just because of the write-off, but they'll also do it because it conserves their capital for operating expenses. And then it also conserves your bank lines for other things that you might need if you do need a working capital loan and or building improvements or building build out or whatever. So another reason for small businesses to do it is the old statement that is made, don't have all your eggs in one basket. And so, but it's typically because of the write-off.
You know, Chris, a lot of the customers that we deal with, and we deal with a lot of startups, and they'll say, we have this much money right here. We don't want to tie it all up over here because we have to buy shirts. We have to promote our business. We have to, in case of emergency. So, you know, exactly what you're saying there.
Yep, that's exactly right.
Yeah, it makes a lot of sense. You know, Chris, I was thinking about what you said. And by the way, for those of you at home, I'm taking notes. I mean, this guy is dropping some knowledge bombs here, and I'm like blown away. 80% of businesses are doing a lease purchase for their equipment.
That's right.
That's phenomenal. And all the companies you dropped, you know, I like the name drop. It was very subtle. But what really kind of jumped out was when you started that difference between leasing a car, and I love that you brought that up, because correct me if I'm wrong, but isn't that kind of more on the consumer lease side of life? Like that's not at all what you're doing. You're more on this like commercial lease, equipment leasing, isn't that? Am I right on that, or am I?
That's right, Jay. It's what's called a dollar buyout lease. So at the end of the term, we charge $1. And by the way, we don't even charge the dollar. You just own it outright at the end of the term. But it is a lease nonetheless for a rental payment for the tax purposes. But that's exactly right. It's a common question I get when people don't understand what leasing is, and they immediately talk about car leasing and they think of the 40 or 60% balloon payment. That is not the case with equipment finance leasing.
I love that. Thank you for explaining that, because I think a lot of new businesses, that's the only real connection that they have to, they've been blitzed by Toyota and GM and all these other, car companies that are trying to get them into a car that they probably can't afford. And they, move these numbers around and they think, hey, it's only $369 a month.
That's right.
Well, there's probably some fine print you ought to read, but I'm really glad that you brought that up and that difference. Is there anything else our audience should know between the difference of that consumer loan versus what you do in this commercial side? Is there anything else that stands out?
Sometimes if somebody gets a bank loan, the bank will typically put their house as collateral. That'll be one of the covenants. So we don't do that. If God forbid something were to go wrong, we would just repossess the equipment. So you don't have to worry about that. A lot of times banks want 10 or 20% down. With our leasing, even for new businesses, it's typically approved with either first payment only or first and last payment only. Sometimes it's approved with 3 payments in advance, representing your first and last 2 months. And very rarely, but it has happened, where we'll require 10% upfront, but it's typically 1 or 2 payments in advance. That's all they're required. There is a small documentation filing fee. Again, just full disclosure, if it's under 20,000, it's $249 filing fee. If it's over 20, it's $295. But again, also with the lease, at least I've heard this from customers, when you go to your bank, they typically, they want to find out what does this cost for $17,000 or $16,000 a garment printer. So it's an Epson printer for that much. I'm assuming that, well, I've heard that goes on. And the other thing, banks typically, they have committees. Things can take a week to 2 weeks. With our financing, it's typically either the same day or 24 hours later with a decision.
Wow. Awesome.
Yeah.
Well, I love that. I love that answer. Thank you. That helped me. I better get back to my note taking.
Okay.
Chris, based on a couple of thousand conversations you and I've had on this, I probably every single day have to say to somebody, no, this is a commercial lease. And then they were like, so I turn it in when I'm done? No. I mean, I and maybe I'm wrong in saying this, but I usually, to simplify it, say it's called a lease for tax purposes.
That's exactly right.
Just making payments and you own it at the end. But Chris, sometimes, and not so much anymore. We used to run into this more where somebody goes, well, the lease payment over here is this amount, but the lease payment, with Chris is this amount. And then you find out there's this balloon payment or fair market value payment. Talk to us a little bit about that. And obviously you said you have a dollar buyout. So talk to us a little bit more about that.
It's a good question. That is exactly right. There are finance companies out there. I won't mention their names. If your audience wants to call me at any time, I'll be happy to just something to be careful of. In fact, I just had a phone call regarding a customer who's coming back to me because he's looking at an embroidery machine, but he doesn't want to go with that leasing company because they have a fair market value 10% buyout, and he's used to, this is his third contract with me, and he wants to do a $1 buyout transaction, which we offer. So yeah, be careful. If there is sometimes when that happens where somebody has told me that, oh, your payment is $50 higher than this leasing company, that's a red flag that they're getting the customer into a fair market value 10% buyout lease. So payments are based on, just so you know, they're based on 2 things, actually 3 things. If they're the first thing that we look at to determine a payment for a dollar buyout lease is time in business, meaning for the apparel company that we're applying. If it's an existing business with good credit, those people are going to get the best terms. The next case scenario, right? We do a lot of startups. Startups are more volatile than existing businesses, of course. And so the payments are a little bit higher for a new business. And what we are at ACG, just to share this with the audience, we are a direct lender. We fund our own deals internally, but then we also are a brokerage firm, and we represent 14 different lenders outside of us. So, for example, we don't do startups internally. I represent 4 underwriters that we do our startups with, and it's basically a good, better, and best scenario. And obviously, our goal is to get the customer into the best payments that we can possible,
Sure.
depending again on their credit. What's that?
No, I was like, yep, I'm agreeing with you. I understand.
Yeah.
Chris, and speaking of that, and we hadn't talked about this before, but a lot of folks, you'll see a lease application and you'll see a little clock going around, and 38 seconds later it says you're approved or you're not approved. So they're basing that on just your credit report or just this or just that. And I've always enjoyed the fact, first of all, that you get back to customers within 24 hours, usually with an answer or needing a little bit more information. But also, we want to present this in the best light. And I've seen you say that to customers 1,000 times. Tell me a little bit about your business. Tell me what got you started in business. Tell me how you're going to use this equipment so that it makes that better presentation, so a better chance of getting approved.
That's exactly right. So my top 2 underwriters for startups, my top one, if you've got a 675 or above credit score, with established credit, they just want to know what your income is. They just want to know if you work another job, what's your income, and that has been my cheapest route for customers, and we do a ton of business with that underwriter. My secondary lender right below them, so if you do have, let's say, a 650, 660 type of score, that's when I send out that email. They want a little bit of a write-up, and that's what they have found is their key to approving customers and keeping delinquencies low, is they want to get to know the customer. Like, hey, do you have any experience in the business? If you don't, that doesn't mean they're not going to decline it. They just want to know. Second of all, they want to know about target markets. Who are you going after? Are you going after churches or businesses or little league baseball teams? Are you going to gun shows or whatever type of shows or whatever? And then with that too, my secondary startup underwriter wants to know about outside income. And they even like to know if the spouse has outside income as well. And again, that helps them to determine a decision. Does that answer your question, Terry?
Yes, absolutely. Absolutely.
Okay, good.
Answers the question well. I'm sitting here again, just me taking my notes so I can brush up on this. Don't be surprised, Chris, if you see something from me coming through in the
one other thing too that we do offer for those that internal, if you have an existing apparel company and with good credit that's over two years in business, do you mind if I talk about the Easy Lease, Jay?
Oh, no, not at all. Thank you. I'm going to share that up here in a minute. So please, that's a great lead in.
So you go ahead and talk about it right now.
Yep, right now.
Perfect.
Yep. Perfect.
Okay. So the Easy Lease program is something that I think developed. It's been 3 or 4 years.
Yep.
And again, not everyone qualifies, and it's not a bait and switch. It just, it's a program where if, let's say your payment is on a standard, I'm just using it. Well, let me just do some math here.
Chris is, by the way, never without his calculator. Let me.
That's right. That's right. So let's just say your payment is $375 a month on a standard 5-year, $16,000 standard deal. We can reduce that payment by 25%. So your payment was going to be closer to $280 a month for the first year. So we call it, our industry, we call it a step-up lease, but obviously with Equipment Zone, we called it the Easy Lease. It just sounded so good. So the payment would be closer to around, let's say, $285 a month for the first year. And then the remaining 4 years, your payment, instead of being, again, $380 a month, it's more like going to be like, again, off the top of my head, like $420 a month, something like that for the remaining 4 years. So we do it where we make it really a low payment, so you can get your, again, if let's say you have to be an existing apparel company. So that's not for new businesses. I want to make sure I'm clear on that. So let's just say you've been contracting out your screen printing, you're an embroiderer or a sign shop, and you want to get into the DTG. That's something that we should be able to offer you. Another program that we offer is a 90-day skip plan. And we do that internally, as well as my best startup lender actually will do it for very, very, very good credits. But we'll either do it with $99 a month for 3 months, or my best startup underwriter, they'll actually do it with literally 0 payments for 3 months. So, but again, not everyone qualifies for that. When I get an approval, I present that approval with the standard program as well as with the 90-day skip plan.
I love that you explain that, because those are exactly the things that we see blasted all over emails and all over the internet, is this, 0 down and no payment for 30 days. And then there's this little asterisk, and in that it says, you must be father time, married to God herself, and have perfect credit. Are these qualifications that are so, it's so narrow that would apply to so few. You just be thinking, come on. There's got to be. So thank you for explaining that, and for bringing up the easy lease. These marketing guys, they like to, rename things and make them easy and put a little spin on it. But we do have that on our website, and I'm going to share that in a minute. And thank you for explaining the difference between the skip plan and the step up plan.
That's right.
We've done both at Equipment Zone. Certain clients are looking for different reasons. But Terry, how many times have we talked about this? If you and I were to do this again, and even if we had a couple of years experience, 3, 4, 5 years experience, how comforting would it be to know for your financials that you're not stressing out over that first year while you're getting your learning curve, while you're finding who's my audience, who really wants to buy DTG, knowing that you have maybe a 3-month, a skip there, or reduced payment, or that year step up plan where the payments are lower for that first year. I think that's just, I don't know, call me easy. I just think it's comforting. It's comforting to me. So maybe the financial guys know that.
Yeah, and Jay, just like you said, the learning curve, and when I do DTF or DTG seminars, I always say, the learning curve is about 30 to 90 days. Well, while you're learning, you don't have to, be worried about, okay, I've got to get this many shirts out a day to make that payment. And you have the opportunity, just like you said, Chris, you don't have the stress. You could spend that time getting up to speed with the equipment and feel a little bit more comfortable. And so I think those are awesome programs.
Yeah, really cool. Hey, so let me get a little more specific. You started to give us a clear picture on what the payments were based on. So thank you for that. But let's talk about qualifying. I mean, at the end of the day, people want to know, how do I qualify? What's it going to actually take? Even if I'm a startup, what does our audience need to know? Because I think a lot of people are tripping over that credit score. And maybe that's not everything. It's an important ingredient, but maybe you could explain a little bit. What else is important? What do we need to know to get qualified?
Mm-hmm. First off, again, with as much as new businesses as we do, I will just get, let's just get this out of the way. I've got an underwriter that does startups with marginal credit. However, meaning if they're in the, low 600s or high 500s, and they would only consider it with a qualified cosigner. Okay, so I just want to get, and it's got to be a family member, and they've got to have sufficient income for us to do that. Now, so that's good on that side, but the only thing that they do is they only do startups up to $8,700. So, and we do run into people who, have basically half of the money to put down, and they're happy to do the 8,700 and then pay the difference to Equipment Zone. Again, I know not everyone has that. Another option, if let's say you have somebody who's especially younger, maybe somebody in their 20s that has not really established much credit. They've got maybe a car loan or a couple credit cards. we will do them with a qualified cosigner and go the whole amount. So there's a difference on that between not so good credit and a cosigner, and then limited credit with a cosigner. And again, same thing. We want to know what the income is on the cosigner, but that should be able to get us there. But again, because we are such diversified, that there's, I generally speaking, for an existing customer, meaning that's over 2 years in business, generally a 640 or above credit score, we should be able to get that deal done with us or one of our syndicated funding sources. Again, we'll look at the others, again, with a qualified cosigner.
Oh, that's great. Thanks.
Yes. Mm-hmm.
Well, Chris, along those lines, when you talk about, credit scores, we hear this a lot. Are you going to do a hard pull? Are you going to do a soft pull? Can you explain that and what the difference is in a hard pull and a soft pull, and what you do at ACG?
That's right. Thank you, Terry. What they're referring to when they say that is an inquiry on your credit report. And there's always these nightmares out there where if you go shop for a car and go to the finance director, they'll send it to 6 different lenders, and all of a sudden your credit score is, was a 650, and now it's down to a 720, or again a 650, or whatever, you know where I'm going. And so so ACG does a soft credit pull, so there is no inquiry from them, from us, on your report. And 90% of our 14 different underwriters outside of us also do a soft credit pull, or they look at ours. So for most cases, virtually, by the way, just to let you know, I've got 2 lenders that do a hard pull out of everyone we do business with. So the most that you would have, you're most likely going to have a 0 inquiries, or the most that you would have is 2 with us. But again, 90% of the time, there would be no inquiry, and because we'll either fund it, or again, one of our syndicated partners most likely is not going to pull their credit. You're welcome, at any point. I do have customers that say to me, hey, listen, I don't want to pull a hard pull. So like my secondary startup underwriter that wants that write-up, they do a hard pull. So, as long as I know that up front, I'll make a note in the system, do not send it to that underwriter. But generally, again, a 1 or 2 credit inquiries doesn't drive your score down. It really is when you get to like 5 or 6 credit inquiries is where it drives your score down. Does that make sense?
That does.
Yes, absolutely.
Yes. Yeah, we do hear that a lot. And I think it comes from folks who are getting ready to buy a house.
Yes.
And they're being told by their mortgage banks, their mortgage brokers, or their financial advisors, say, hey, don't do anything right now.
Don't do anything.
That's right.
We don't want a whiff of anything to change. So
yeah,
I appreciate you.
That mortgage broker is also thinking of his or her commission as well.
100%. 100%.
And so I have to tell them, no, we don't do, again, that's another thing is we, these companies out there that will give a decision in 39 seconds or whatever. Those, we like you guys at Equipment Zone, we like the customer service and be able to talk to you. So again, I don't bite, call me. I want to talk about your situation. Again, as Terry said, we position your application in the best light.
Yeah, I love that. Well, and I can confirm, by the way, Chris does not bite. So,
and Chris, I think that's another reason that Equipment Zone has always done so much business with ACG is because we base our business on relationships as well, just like that's you right. do. And yes. So it's certainly been a complementary relationship for sure.
That's right. We have the same mindset as you guys, as well as many of your customers who are listening. And that is, you're not in it for the one-time deal. We're not here to
amen.
Excuse my language, screw you, if you will. We're in it for the long haul. We want you to come back to us when, if we do this deal with Equipment Zone, if you need more of Equipment Zone, we want to take care of you, but we also want to take care of you if all of a sudden you're like, hey, I'm in the market for an embroidery machine. Well, we want to keep you happy so that you come back to us, and it'll even be easier because we'll have all your information on file.
Yeah.
I've had many times people say to me, I already have a lease through ACG, or I just paid off my lease on my embroidery machine with ACG. So now I want to buy a direct to garment printer, or I want to buy this, or want to buy that. And you're right. It's wham, bam, easy when you already have all their information.
That's right. Because once we have your driver's license and voided check, we don't need that up front. But if you move forward, then we save it in our system. So we don't ever need it again unless your driver's license expires, and then we'll just need an updated driver's license.
I was just going to ask you that, Chris, is like, what are the parameters? What information do people need? Is there a document, or what are the documents they need? Maybe you could walk us through that so people could kind of mentally take notes.
Sure.
And say, okay, I need these 4 documents or whatever it is.
That's right. So first off, again, when I get an approval, the first thing I do is I call. And in this day and age, we all know most people don't recognize numbers, and so nobody picks up. So the second thing I do is I send out a text, say, hey, you've been approved, call me. And then the third thing I do is send out an email. I'll send out an email no matter what, but I do try to talk first. And that email is outlining, hey, you've been approved. Here's the steps. And the steps are generally this. I just need a copy of your driver's license, either a voided check or a bank statement on their letterhead with your full account number and full routing number. Because again, the transaction will be set up, on ACH, on automatic withdrawal. So there's no writing checks. There's no putting anything in the mail. So driver's license and bank information, meaning voided check or bank statement. If we do the deal internally, we need insurance, just the name of your insurance company. The equipment needs to be insured in case, God forbid, it gets stolen or caught in a fire or vandalized. So just, we'll request info on that. Some of my top startup underwriter, they don't require insurance on transactions under $30,000. So I take that out of the email. It typically is that, and then in the email it says, call me, finalize your quote with Equipment Zone, and then of course call me to go over payment options. And again, we'll go over it. I do want to, if I can get this out of the way, because it's a common question that probably will be asked, and I'll get that out of the way, is early payoff. Okay, that's the one thing that banks have on us, if you will, is early payoff. Most people don't ever want to pay their leases off early, because if this equipment makes you a lot of money, it's one more reason to keep the lease going, to reduce your taxable income. But it is a very common question. So typically our leases, we discount them anywhere between 4 to 10% off. Actually, I will tell you though, my top startup underwriter, they actually do have a no prepayment penalty clause. And so we have gotten many customers into that. But again, each customer, each lender is going to be different, and we'll go over that. But that's I'm not sure if I hope I'm making sense. The bottom line,
absolutely.
Yeah, is, if we do it, there's nothing in writing, but we do discount our payoffs as long as you've gone at least a year on it. And that's the way most of my underwriters, but my top startup underwriter, they actually have it, and which we've done a lot with, as you know, Terry, and you've seen this, they have a no prepayment penalty clause. So, but that's again, only one out of the, 14 different underwriters, including ourselves. So we'll talk about that once you've been approved, if I can put it in writing or if it can't be in writing.
Hold on, Terry, before you jump in, because I just want to make this point. It sounds like with all of those options, Chris, with everything that's, swirling around in my head, it would be really wise for me or somebody to sit down with my real accountant, my CPA, my financial expert, to be able to say, okay, how does this affect me? And how does this lease help me? Because I've heard you kind of refer to that a couple of times, like, you don't want to do that because it takes away this advantage. That was the point of getting the lease in the first place.
That's right. That's right.
Okay.
Yeah.
I'm sorry. Go ahead, Chris.
Okay. So, again, for a lot of new businesses, I'm going to assume that there's initially, for at least the first year or two, you're not going to really get much tax benefit because you're not in a tax bracket yet. But the advantage to you as a new business is you're going to be in your third year, if you do a 5-year program or whatever, in your third and fourth year, you'll be able to get more, you'll be able to write that off. So if you're a new business, the general benefit up front, if you're a new business, is you're conserving your bank lines and you're establishing credit for your business, because this will be reported to the business credit bureaus.
Excellent.
Yes.
I'm glad you brought that up. Terry, what were you just about to say?
Oh, I was just going to comment also, sometimes, and not very often, but sometimes people will say, can I just lease the equipment? What about the startup supplies? What about buying a 4-year warranty with the purchase? So Chris, could you
and the software and the supplies and that's a great question.
My startup inks and
you bet. We generally have, lenders in our industry generally have a 25% soft cost allowance. So we do run into people that do say, hey, I just want to finance the printer. I don't want to finance the shipping or the inks, and that's fine. If you do want to finance the inks and shipping, again, generally it's okay. I do know I remember, I think I did one several months ago, and I think it was the first one where we were able to do the warranty in it. I can't remember what the dollar amount size was, and I think it was my top startup underwriter did that, and so. But generally, it's really your call, and or if, let's say, we come back and say, hey, we'll only do, let's just say $1,800 of that, then they could pay you the difference. But generally, yes, we can add the soft cost into the deal.
Chris, and I'm glad you brought that up, because so often somebody will say, I want my payment to be this, so how much should I pay up front? Or and I guess what I want to point out is how you work with the customers. And not everything is cookie cutter. You work with the customers back and forth on making it so that everybody is happy with the deal.
That's right. It doesn't happen often, but it does happen. We're right. I'll quote the customer, 2, 3, 4, and 5 years, and then they'll say, especially if somebody's going to do that, they typically want it on the 5-year plan. Hey, Chris, what do I need to pay down to Equipment Zone to make my payment $250 a month? And then I'll use the lease factor and backtrack it in and say, you'll need to give Equipment Zone $3,000, and then we'll do the rest.
Perfect.
Yeah.
Well, I have one last question, Chris, and we're coming up here on the end of the year. So talk to us about this push for year-end purchases. And I'm taking vacation time at Christmas, but I'm not taking vacation time the week after Christmas, just for all those people who call up and say, hey, I need to make this purchase before the last day of the year. Talk to us about Section 179 tax deductions.
You bet. And the short answer on that is get with your tax advisor, because everyone's situation is different, but the IRS allows up to a certain amount of, and again, this really applies more to customers that are in a tax bracket, because again, if you're not in a tax bracket, there's nothing to write off. So, so if you are an existing business, Section 179, if you wish to take the deduction this year, you can do that. Now, you can't double dip. You can't take Section 179 right off this year and then still expense off your payment. So you have to do one or the other. So, but again, I highly recommend your audience to get with your tax advisor to best describe if Section 179 will benefit them, or if they should just do the lease with the, meaning the lease with the writing it off as an expense every month.
Perfect.
Yeah, well said. I think that's a nice way to wrap this up. A little bow is to say, with everything that we shared, be sure to check with your financial team, whoever that is, a CPA, somebody that's wiser than Terry and Jay for sure.
And me.
But somebody who could at least maybe even help go through this process with Chris, because I'm sure there's been times, Chris, where you've been able to explain to somebody, here's what I'm trying to say. And maybe they even get their financial expert on the line and the three of you, work through this. So
that's right. One other note too, if you do get approved at ACG with us or any of our syndicated sources, there's no cost or obligation. So if I approve you and you want to move forward, awesome. If you win the lottery and decide that you want to pay cash or whatever, awesome. There's no application fee or anything like that. So I just want to make sure that's out there as well.
Perfect. Terry, we had one question, and it probably is more geared to you than to Chris, but either way, somebody early on had asked about, Epson's warranty and why that they, there's a 5-year lease. So if the warranty doesn't go that long, then I've got this machine that's not covered. Maybe there's a gap, maybe there's not. Terry, do you understand what I'm asking?
Yeah, exactly. And Epson actually is the only DTG company that offers an extended warranty. When you buy an F2100 or an F3070, you're going to have a 1-year warranty, but you can buy additional years of warranty up to 5 total years, which is Chris, I would think the most standard lease is a 5-year lease, isn't it?
It is, yes.
So you can certainly buy that. You can buy that additional warranty up front for some substantial savings in cost, or you can buy it at the end of each year. But you can certainly have your machine under warranty for the full time you have it under lease as well.
Awesome. Well, thank you for clarifying that. And I'm sorry I didn't get to that question sooner. I was just making sure that we covered the first material and then save a little time for that question. Before we go, if there is another question, now's the time to ask. But here's that page on our website, by the way, where we describe and give an example of the easy lease. And in this case, we still have it shown in the little bubble that, they can, under certain qualifications, they could take advantage of that $99 a month for the first 3 months. As Chris explained, it's situational. And that would be something to work on with either Terry or Amy or anybody at Equipment Zone, as well as with Chris to find out which direction is best to go. And then thanks, Terry, for also giving a nice shout out earlier on in the webinar here about, this is where this webinar will be hosted. So if somebody's watching this, of course, we're recording this near the end of 2022, but everything Chris said and all of the wisdom and advice and information and insights, I think for the most part is going to apply next month, the month after that, and so on and so forth. So if you're watching this somewhere in 2023, it's probably great info and it still applies. But then go back and check with Terry, check with Amy, get on the phone with Chris if you have any questions about what we covered or how the leasing process works or what documentation you need or the application process. All of that is why we love working with Chris, because he's so flexible and he's so willing to talk. He's available, he's accessible. He's not scary. He's not your mean dad or your grumpy uncle.
and I don't bite.
And if anybody wonders, do a lot of people do commercial leases on this equipment? Chris and I either talk, text, or email every single day.
Yeah.
Well, and that's wise, because you guys are in the middle of lots of transactions, and I know that's true with Amy as well. So here is our key contact information. If you have more questions specifically, you can reach out to Terry, or you can reach out to Amy, or you could even just start with the 800 number at Equipment Zone. Chris, I also want to give you a moment to say, is there if someone wants to just reach out to you directly, how would you like them to do that?
Again, phone call would be great. My direct phone number is area code. I'll give a second. 440-579-0404. Or my email address is my first and last name all together, Chris, C-H-R-I-S, P as in Paul, F as in Frank, R as in Robert, I as in Ice, E as in Edward, M as in Mary, at the number 1 acg.com. So Chris Freem at 1acg.com. But again, please give me a call. I'd love to talk to you.
Fantastic.
Mm-hmm.
Well, that's our webinar for today. Chris, thank you for being our special guest, our financial expert.
Thanks.
We really do have a better feel of the options. We know to be wary of staying away from those bait and switch programs, which you have nothing to do. That's not a part of your program at all. We're like you. Long-term relationships matter. Helping people get started in their business matters. And I love the fact that you eliminate the jargon and make it easy for guys like me to get it. So thank you for joining us. That's been the conclusion of another great Equipment Zone webinar. Until we see each other again, be safe, and we'll talk soon. Thanks, Chris.
Thank you.
Bye, everybody.